So you been?
Very good. Real busy. I'm sure you have. And I'm with EXP Realty, as you may know. I don't think you do. So that's been great. You know, we don't still have a huge presence in Westchester. It has not been ideal. So they've blown up in some areas. It's done pretty well on the island, but it's not grown as much here. I think the powers that be are a little bit more resistant here. They're doing the best job of fighting people off. So maybe not forever.
I don't think it'll be forever. It seems like a model that is attracting the quality agent who doesn't need maybe the hand-holding that other people need.
And they don't need the copier, and they don't need all the stupid secretary fee and carpet cleaning and water fountain. The model in real estate is just broken. I mean, the thing I heard just now really at the Inman conference is you're not with Century 21. You're not work for this company. You are the business, and you're plugging in your transaction to a software platform
and paying for the privilege to do it. Right?
I'm crazy. Yeah. Well, I mean, it's shifted, and I wonder what these legacy companies like the Realogy companies are going to do, how they justify it.
They're done unless they figure out another way to generate revenue that isn't the mortgage space or the title space, because that's not going to work either. So
that's not going to work. That's never happened, and
everybody's tried it and nobody's made it work.
The problem is because of RESPA, there was not an incentive. So these agents have resentment. They're not going to make the boss even richer.
That's part of it. Yep. So yeah, I think the legacy companies are done. It's just a matter of when. The thing I know is that most of them are old enough that they either made enough money and they'll just ride off into the sunset, or they don't have any vision at all, because there's no sense in working for Douglas Elliman or Coach or any of these. They don't give you anything.
Well, they've done a great job of letting you think that your sellers in Northport need to see Daniel Gale.
Right.
And there's truth to that. There is truth to that.
If I'm working with a subpar agent, yeah, the brand is important. But I'm not hiring Daniel Gale to sell my house. I'm hiring an agent to sell my house.
Yeah, you know that. Speaking from you, but the fact is they think they're all set. If you buy a Harley Davidson or you get a ring from Tiffany's, you're just, without thinking much about it, you're all set. You did what you had to do. You know, there's Mr. or Mrs. Important. Let's say Mr. Big Shot gets off the train. He wants to see a Coach sign or Daniel Gale sign.
Right. The uninformed
can't be said that.
The uninformed are attracted to the brand.
Which is everyone. I don't believe anyone thinks otherwise.
There's a really good agent or a dominant team in an area. Michael Ardolino is not Realty Connect. Realty Connect is Michael Ardolino. His name's at the top of the business card. Realty Connect's in the bottom corner. So where we're going is the EXP model. The stronger agents are going to have people who work for them, and there's going to be, no 6% franchise fee, blank transaction fee, whatever else. That's going to go away.
I totally agree. But keep in mind, on the other side of the coin, there's agents that can't call a for sale by owner. They're not going to bother some agent that they think loves Keller Williams.
Right, but those people are not going to be in the business anymore. We're elevating the game to where I do a first-time homebuyer seminar every 2 weeks. Mm-hmm. One of the main points I make is that 90% of everybody in every industry is mediocre or worse. Okay. That's true of realtors. That's true of loan officers. That's true of plumbers. That's true of the person who cuts your hair. But you can get a bad haircut. Your hair will grow back in a couple of weeks. You can't make a bad decision on your real estate purchase or sale, or the financing of it, or the lawyer work. You need a top 10% person. And the market is coming to understand that. And the bottom 90% are going to become useless. So we're going to raise the level of professionalism of the people who are left. They're going to get paid more because they've earned it. And they're not going to be competing against the person you met on the soccer field or at the PTA meeting, because those people will not be able to survive. And, the day of a housewife who did 2 or 3 transactions a year is going to go away. People can't afford the market the way it is now. I could sell this cup, say it's a house, and it'll go for $200,000. That's not the real market. As the real market comes back, the level of professionalism, which will be defined by your marketing plan, by your negotiation skills, by the things that make you a great real estate professional, are going to start, the cream is going to rise, and those people are going to dominate, and they'll make more money, and they'll have people who work for them. That just, to me, it's inevitable that we're going to be a very different industry 3 years from now. As things slow down now, you're going to start seeing different conversations out in the marketplace, I think. And I think a lot of people in my business have made a lot of money the last couple of years, and they're my age, and they're going to say, you know what, it's time to retire. Why do I want to do this anymore? And they'll have the money, and they bought 3 investment properties, and they'll go away. So some of the really good loan officers will just retire. The loan officers who've been living transactionally on the phone, dialing for dollars, there's no business for them. They'll go away. And so again, we'll consolidate the number of loan officers in the industry. They'll control a bigger market share, and they'll do well. But a lot of people are going to go away on the mortgage side and on the real estate side. I'm convinced of it.
Yeah.
Anyway, is that what we would?
Listen, that's happened before. There was the contraction. There was people who left in the 2008-9. People left, and there was nothing going on then.
Right. Well, that was somewhat of it for different reasons, right? So that's
very different.
Like, I don't believe
that's a really bad way to look at it. People are comparing this to that. They're totally different.
This is not a housing bubble. This is not where houses are overpriced, because there's still 10 people who want to buy every house. So the pricing is not the problem. The problem is going to be affordability. With rates climbing 1.5% in 3 months, a lot of people who could have afforded that $600,000 house now can't. But it's not just because their mortgage payment went up $400. It's because their heating costs went up $100. Their food costs went up $200. Like, their overall expenses to live in this house went up $1,000 a month. And people are saying, yeah, I don't know if I can afford $1,000 a month. So,
right. And that's not part of your DTI. That's part of your just life.
Right. And so there's only so many times you're going to not go out to dinner to save a few bucks, or, your kids are going to wear their sneakers 3 months longer. I just see the prices have already started to level off. In some areas, they're actually starting to dip in Queens and stuff like that. You're seeing price reductions every day on the MLS. I think prices are going to hold steady through the summer. Rates are going to go significantly higher than they are right now.
So what do you think?
What do I think? I think in history, the only time you stop inflation is when mortgage rates get above the inflation rate. Why do we have a great economy for the last few years? 2% inflation, 3 to 4% mortgage rates. So if inflation's really 7, rates have to get at least to 7. And now, are you going to do that in an election year? I don't know. I don't think you are, unless you really want to, make this a Republican country. I think a lot of that will happen after November. So my coaching advice to agents and to loan officers is, we're going to have a great summer, because the new normal is 5 and 5.5. Like, we've taken our lumps over the last 6 weeks. If you go on bankrate.com, nerdwallet.com, mortgage rates are at national average 5.25. So It's not like clients are thinking we bait and switch them. They are what they are now. So they're adjusting. They're looking at their pre-approvals have a more realistic payment. They're already past the fact that, my pre-approval says 3.5. Well, that was in January. You didn't find a house. Now it's 5.5. Right?
So let me ask you how you're handling those deals where people might have just got in contract before the raise. We're talking about like 10 days ago. What happens when someone's qualifying with their DTI and ratios, and then if they don't have a rate lock, which I'm sure they would not have a rate lock because the loan wasn't approved.
Right. So some of those people are now paying points that to get the rate back to where they want it.
Which I think that makes sense.
Some people are going to move towards interest-only loans so that they qualify based on that payment.
Is that readily available like the old days?
Well, it's not. Fannie's not buying them, but there are some investors, but the rate's higher. So you pay a higher rate, but the overall payment is lower because there's no principal in it. You're going to see ARMs come back into, vogue again.
I heard the 10-year ARMs are really getting hot.
Yeah, the 10 years are still very close to a fixed rate. You're going to see 7 years, maybe even 5-year ARMs come back over the next couple of months.
Wow.
But
well, I'll tell you what, this sounds a bit exciting because we lived in a vanilla ice cream world before. Now this is people actually doing some service and being creative. Now you could pick a banker based on their acumen, not just an order taker.
Well, 100%. And that I'm excited by the idea that not everybody can be a loan officer. And so the fact that I've been doing this longer than most of our clients have been alive does give us a competitive advantage. And the loan officers that work on our team are exposed to a different way of thinking because I have seen ups and downs and ups and downs. Nothing like this. This is unique. Like I tell people all the time, this is the second worst time to buy a house in my 38-year career because prices are going up and rates are going up. The recipe for disaster. But the worst time is 6 months from now because prices are going to continue to go up and rates are not coming back down. So you're just going to pay more if you wait. So yeah, it sucks that you didn't buy it 90 days ago, but it's going to be worse 90 days from now. So take your lumps, get in now because appreciation is still going to be there. And the good news about real estate is that it's a long-term investment, not a short-term investment. So even if it does dip in value a year from now, who cares? You're not selling a year from now. By the time you look to sell 5, 6, 7 years from now, you're going to make money in appreciation. My biggest concern is still inventory, right? There's very little inventory. And the question is, with rates moving this quickly, are the sellers we're expecting to sell this spring and summer going to leave their 3% rate that they have on their house right now, go buy a new house at 5.5%? I think a lot of people are going to stay where they are and do improvements, not sell their house. Where we were hoping we were going to get a lot more inventory this year. I'm not sure.
Well, yeah, I mean, that's true, but that you're mentioning the people who have the 3% who closed in the relative 24, 36 month period. But what about
people have refied in the last?
Oh yeah, the refi. That's very recent. That's 2 or so years.
Right. So a lot.
But Ma and Pa Kettle that are sitting on epic, equity, which has never happened. This is it. Right now is the time.
Well, that's why I think that even though rates have jumped, there'll still be refi business because if you don't take that $100,000 in equity out of your house now, it might not be there next year. So yeah, you're going to pay a little bit more for it, but you can get 5.5 is a lot better than your credit card or a car loan or a personal loan.
I've been hearing that. Your credit card's 18%, your car loan is 7%,
and you don't write it off. The mortgage interest you still can write off. It's the only write-off you have left. So I think a lot of people will refi for equity extraction over the next year, where they were doing it just to get rid of their PMI.
You mean regardless of the rate, they'll go to essentially the same or a worse rate?
Think about it. Let's say you had a 4.5 FHA rate from 4 years ago, and you're at 96 LTV. Now your home has gone up 20%. You can refi and get rid of the PMI. So you're knocking 0.8% off of your rate anyway. So even if the rate went up 0.8%, you're in the same interest rate place, but you're going to get the equity out. Go back out 30 years, your payment's not going to necessarily change very much. And, it may make sense to take the write-off on the $100,000 you're going to take out and add that second story or expand your house rather than try to sell and go buy a new house. I don't know. It's going to be an interesting time.
So there's going to be more of a hold, and then the only time that hold is going to be over when, Granny dies, and then that's it.
Or they decide to move to Florida. Like I've been half tongue in cheek telling agents, if you had the guts, I'd be advertising, why do I still live here? I can work from home. Why am I paying these taxes? Why am I paying these energy costs? Why am I putting up with winter? Why am I cutting my lawn? Why am I dealing with the traffic? It's time to move to North Carolina, right? And maybe get a condo here to visit my grandchildren. But other than that, it's time to move. Time to leave.
Dean, I spent, my kids are young. They're 10, 11 years old. And I was not given any assurances regarding COVID, the first round, that they were going to start school in 2021 in remote. So I said, you know what? I'm out of here. And I moved January 6th to May 15th to Jupiter, West Palm, Palm Beach Gardens. Gorgeous, clean, nice. Everything's so convenient. You park right in front of the place. Everything was built by no, I didn't live there, but yeah, the people who did live there, you just were now, instead of braving this brutal winter in the LIE, you were going on a side street to a nice restaurant. And the restaurants were, for what we had, I thought they were about 2/3 the price. You were getting a break every time you went out. So it just was so much more conducive to, a more active lifestyle too.
So as a real estate agent, talking to sellers about, hey, I know I have an agent I partner with in Naples. Maybe you want to talk to them about the next chapter of your life rather than, fighting this rat race and dealing with increased crime, crazy taxes, this, that, the other. There's plenty of reasons not to want to live here. And I don't see anybody encouraging people to move. But if I were in the business of getting paid by helping people get to the next phase of their life, I'd be honest with myself and say, you know what? You're 65 years old. Do you want to be shoveling snow? Do you want maybe it's your grandkids, but a lot of your grandkids, all 4 of my kids left New York, right? 3 are in New Jersey, 1's in Massachusetts, so I'm still 3 hours away from anybody now. So if I was in Florida, I'd be 3 hours away by plane.
I did that in 2022. I've been there 3 times to West Palm. I live near Westchester County Airport. I was 7:15 in my friend's kitchen. I was in my bed at 11:30 in my bed with door to door. It was a 2-hour, 3-minute flight. Uber's waiting. I said, listen, from 12 to 4, you get to where you're going. That's with getting to and from the airport. So really, from New Rochelle, for me to get to Montauk is about 3.5.
You're right. So on a Friday afternoon, it might be 6 hours.
Forget a Friday afternoon. I wouldn't go. But if you're cooking on Saturday morning at 7, there's still 3+. If you get there in 3, it's a home run, maybe 3.5. So that's what, that's where this new, and there's entire teams at Keller Williams and EXP, the New York to Florida relocation. There are teams built on what you're talking about.
I just think it's common sense. If being a great salesperson is really understanding the needs of your customer, how many agents or how many companies are really addressing what the true needs are? And that's why it's always easy, I think, to become one of the top 10% people. You just have to think a little bit and not follow the herd, because the herd is appealing to the 90%. It's not, most of the models in real estate would rather have 100 agents who do 1 deal each on a 50% split than 10 deals from 10 people, same 100 deals, because they have to pay more to the agent, right? So the business model of the real estate company is not for a significant producing agent. It's not, because the company makes less on them, period. And they'll argue, oh, but we get more signs in the ground, more this, more notoriety, more baloney. It's all about dollars on the bottom line. And they'd rather have somebody who does 2 deals a year than, somebody who does 25 deals a year. At least that's the way I see it,
No, you're right. So, what are you telling the agents now? How, let me tell you a little bit about PlugIntro and what we're doing here. My 2 problems with EXP, or myself, even as an attorney, where I didn't have enough people to speak to and I didn't have enough value. And the value even someone like you have is your insight as to the industry, which we're clearly demonstrating, and then within a transaction. But nobody in the business networking field, yes, there's been referrals. Yes, you've been the giver and getter of millions, I know. no one's ever created a place or a way for others to promote themselves. So in this case, we give agents their own business development platform punctuated by their video interviews in their series. In this case, I'm doing it the other way, where man bites dog. And I'm saying, Dean, you're the lender, a well-known, accomplished professional in the area. Let's let agents know more about you. Let's let them have a better idea of how you can even, the insight you just provided. For instance, the ARMs, the tenure, the points. Those are 2 or 3 things that are very, very valuable. That is almost verboten. No one talks about adjustables. No one talks about points. Points are a bad thing, remember? Brokers have it better, remember? So we're talking about 2 or 3 pieces of heresy that you're mentioning. So we have to let them know what.
Most of my life, I've been a heretic. Well, listen, I learned a long time ago. Again, like I said, I've been doing this a long time. First 10 years of the business, I was a transactional loan officer like most people. My dad owned the mortgage company. Our deals came from the yellow pages. People called in. I talked to them. When I had to deal with a real estate agent, I hated them because all they did was annoy me, and they didn't refer the deal. So I was too young and stupid to understand that I'd be better off creating a relationship with an agent who could give me 6 to 10 deals a year than a consumer who's giving me one, right? So my business model changed a long time ago to where it was, who is my client? Now, my client, of course, is the person who's borrowing money from us to buy their house or refinance their house. That's obvious. But to me, my client is really the realtor, right? And so how do I add value to the relationship with a real estate agent?
How do you?
So for the better part of 25 years, that's what I've done, right? Whether it was on behalf of a company or just on behalf of our team. And so for the last 7 years, my partner Lisa Zambelli and I, and a few loan officers that work for us, Lauren and Brendan and John and whatever, we have narrowed our focus. I have about 25 agents that we work with. That's it. Once a month, we do a group meeting where they all come to me and I tell them what's going on or what they need to be focused on, or here's a marketing idea, or here's some technology, or here's a plan. And they go and work the plan. And in between that monthly meeting, many of them, I have a weekly coaching call or whatever else. So I've learned a lot about being a good realtor without being one, because that's how I serve my client, right? So I have 3 realtors who have just finished writing books. The books are, what a seller needs to know to sell a house. And so the 4 of us got together, and the books are 60 pages long about everything that goes into what a realtor does. And those 3 agents would set themselves apart from any other agent that they're competing with, just on that one thing alone, right? I do a first-time homebuyer webinar. It's not even first time. It's a home buying webinar every 2 weeks on Zoom. I advertise it on Facebook, and I get anywhere from 30 to 50 people every 2 weeks. We market to them, and it's turning into transactions. So now I'm creating transactions that are consumer direct that I can refer to my agents, right? Oh, where are you looking? Are you working? Because the webinar usually attracts people in the very beginning process. So it's not like they're ready to buy a house tomorrow. They need to do something with their credit or save some money and whatever. But now I can team them up with an agent. So I can help grow an agent's business literally by saying, here's Mr. and Mrs. Smith, right? I wrote an ebook about the 8 steps of the home buying process. Our mutual friend Dean Miller and I have been working on a video series that has been shot. The videos have been shot. They're now in the editing phase. It'll be a 6-hour. This is everything you need to know about buying a house, and it involves 6 or 7 different realtors, home inspector, 3 attorneys, insurance people, everybody in my office.
I like it.
When I make it available to the people we've pre-approved, they will learn things on a much deeper level, right? Because the way I start my homebuyer webinar is I believe that people know less than half of what they should know before they start looking for a house. They know how many bedrooms they want or size of kitchen or backyard, or school district, they know that. But they don't know what's involved in getting a mortgage. They don't know what's involved in a home inspection and what the role of the appraiser is, or what kind of homeowners insurance and what is PMI. And there's 400 other questions that they'll beat me up over an eighth in rate. And then I see them sign contracts that say if the appraisal comes in 50,000 less than the sales price, they'll still buy it, right? Because they're so intent on, I have to get a house, that they're not making good financial decisions. And so we've dovetailed all of that with, we've added a component to all of our past clients called the Art of Home Ownership. So they get, at the time that our client's commitment goes out, they get into a system called Updater. An Updater, they put in their information and it notifies all their credit holders and everybody else that they're moving, change of addresses, tells the post office, social security cards, blah, 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 are all done automatic for them. We will send them an email every couple of weeks after they close for the next 10 years that says, this statistic, National Association of Realtors says 44% of home buyers regret buying a home 1 year afterwards.
Really?
Not because it wasn't a good idea to buy a house or they got a bad loan. It's because they had no idea what managing a household really was, right? They lived at home with mom and dad and they did everything, or they lived in an apartment. They didn't realize, you have to change the filter on your refrigerator for the water, right? You have to blow out your sprinklers. When do you plant in your garden? How do you service this? How do you do that? So every couple of weeks, our clients this is the time of year you do this. You check your, carbon dioxide thing. You do all of these different things to make the owning of a home more easier for them, right? And it's another way to market to clients and stay in contact. 60% of our business is from past clients now. And that's because we're in a relationship. It's not a transaction to us. They have a baby and we see it on Facebook. Lisa's sending them, outfits and, things like that. So,
that's a complete, I think a comprehensive approach to client management and being a big part of their lives going forward and not being transactional. To me, what I put together for this platform and we offer to agents is we offer a business exchange to the industry colleagues and local business owners and your just regular family and friends. So what you're doing sounds great, and that really is compelling, and I think that's really probably better than what we have. However,
so I'll give you another idea. There's a company, corporate. I'll email you when we're done. But we have these VIP cards, and everybody we meet, from an open house to a closed loan, gets these, and they get discounts at Lowe's, at Sherwin-Williams, at the movies, at some restaurants, and then we add our own businesses. So our home inspector takes $50 off, or this does that. We have somebody who is here working, calling restaurants in given neighborhoods and saying, what's the value of a new customer? Would you give them a free glass of wine on their first visit, or every time they come, or a free appetizer, or something? And so we've already distributed over 1,000 of these cards, and we have another 2,000 that I've already paid for. But it's, Lisa's picture, and people are going to hold on to this for the next 5 years in their wallet, where your business card, that there's no reason that after they bought the house, are they going to remember you? Nor will tell you they won't. 18% of home buyers.
Well, I think that's great. But again, that's what I've done. I've not done anything as comprehensive as that, but of course there's importance in staying top of mind awareness with clients. Because I believe so strongly in the power of loose connections, we know each other through people and all this Long Island, history and industry in our career. We've given agents, or someone like yourself, to provide with agents a chance for the local business community to promote themselves. So in your case, I hear that you're passing on some coupon or something where it benefits the individual and it works to make you look great. We have agents, which if you watch any videos, we have them invite their contacts and they have meetings. So we have an online business development meeting, like a networking group, twice a month. The agent is the one that provides it to the plumbers, electricians, dentists, accountants. People are Facebook members of something like your group. What's great too is those 25 agents that you serve, they don't really have their own local business development platform. And if you were just to hit 25 invites, they get this from you. They don't know me. They don't know my staff. And then you are, of course, the one and only lender with them. It gives them the chance through the power of loose connections to meet more people and the law of reciprocity, where if they help those local business owners, those title companies, those home inspection companies, it gives them a chance to be seen as the provider and to really be connected to the business community.
100%. I mean, I've been doing that for 20 years in a non-formal way, right? The story I always tell is one of my best friends is a dentist. And a conversation I have with everybody who's self-employed is, where do you get new clients from? So I'm figuring if I could steal an idea from the dentist that nobody's doing in the mortgage business, that's how I win, right? So he's telling me about this list he buys every quarter of new people who move into the neighborhood. And then he mails them, a coupon, free teeth cleaning or x-rays, because people move from Queens to where his office is in Iceland. And I said, okay, what do you pay for the list? And it was like $300 a year. It's like 20 years ago. And I said, all right, what if I could get you a list that wasn't 4 times a year, but was every week, of every new person who moved into your neighborhood? And it's free. So does that have value? He goes, of course. I save the money, plus I get it before every other dentist can have access to the information. I said, all right, so let me introduce you to my realtor friend. And she's going to go on the MLS every Friday and print out a list of everybody who just moved in. And then she's going to send it to you. In exchange, you're going to put her business cards on your counter. Because as much as agents talk about having signs in the ground that people driving by, if I walked into the dentist, the deli, the dry cleaner, the mechanic, and I saw Scott's business card, I would say Scott owns this neighborhood, right? Before you ever got a sign in the ground. Mm-hmm. You were the network guy. I'd be calling you to say, hey, Scott, I have a problem with my car. Who should I call? Right? That's what I want. I want to be the local celebrity, exactly what you're trying to do. Mm-hmm. And so I went to that agent. I said, okay, every Friday you have to do this. And then back then it was fax it over to the dentist. I said, now you have to go find one other business every week in your community that wants access to new people. I said, go to the pizza guy. There's 5 pizza guys in your neighborhood. Which one do you like the best? Go to him or her and say, I'm going to give you a list every Friday of everybody who's moved in. Mm-hmm. I want you to deliver a free pizza to them, courtesy of me, and I don't want to pay for it. So the pizza guy's going to lose $5 to make a pizza and have it delivered. But if his pizza's any good, people are going to reorder forever. He's going to get a leg up on the other 4 other pizza people.
Yeah. I mean, you think like I think, giving something of value to be in their lives. I'm really happy. I think that I'm really, you're the highlight of my second part of my week here, where we get to go with an old pro and people that are universally known. And yes, you're a little bit, they think of you as crabby. We know that. They do. But
my wife stayed with me for 35 years, so
right.
Somebody else's vote counts a little less than that.